Welcome to the Floored-U-Cation podcast. I'm your host, Kyle Hedin, owner of Illustrious Hardwoods in Phoenix, Arizona. We're here to talk with flooring professionals from all across the country about the issues that matter to you. This week's guest is Janice Nordmark. Janice owns and operates Bulletproof Bookkeeping in Mesa, Arizona. She helps us understand some basics about bookkeeping and how to initially set up our books. We also cover why you want to consider hiring a bookkeeper and more. Janice Nordmark, welcome to the Floored-U-Cation podcast. It is great to be able to sit down with you in person. So, we don't have a flooring professional this week, but I can tell you that my business would not be where it's at today without Janice's help. So I will let you introduce yourself and give us a little bit of background and how you came to do what you do.
Well, my name is Janice Nordmark. I am the owner of Bulletproof Bookkeeping in Mesa, Arizona. I have been doing bookkeeping for over 30 years at this point, between contracting, property management, restaurants, and other types of business. I've got over 30 years. And I have been able to do Kyle's books for him, I'm proud to say, since the inception of his company. So this is something that we do. This is something that we specialize in. We specialize in helping you grow your business so that you're successful.
So you're helping us grow our business and become successful. What does that actually mean?
That means you need to understand how the finances for your business work. You need to understand how your marketing is working, whether or not it's successful, whether the funds that you're putting into a certain type of marketing is actually giving you the greatest benefit that you could be receiving from your marketing funds. A lot of people put a lot of money into marketing and they overdo it, and it can kill your finances. So you want to make sure that you're using marketing that is going to make you the most money. You get the biggest bang for your buck, so to speak. If you're not doing that, then it's not doing you any good to have it, and your books will tell you whether or not you're getting that by setting up ways to track the traffic through, and you know where your marketing dollar is at. When you set up your chart of accounts, you set up an account for the company that you are actually using most of your marketing for, and then you track through your client contact information and people that are reaching out to you, how they heard about you, and you record those contacts against that, what we call a class on the chart of accounts, so that you know where you're getting most of your business from. You know whether it's driven through Facebook, you know if it's driven through a membership, maybe a professional membership someplace. You know if it's all word of mouth. You know if it's your neighborhood social media platforms. But if you don't track it, you don't know, and your bookkeeping can help you track all of that.
Well, that's over my head. And I mean, I get it. Don't get me wrong. But let's take it back a notch. Okay, so that's all fine and dandy. We're set up. We're an established company now. We're tracking marketing. Let's start at the beginning. Okay, I know, just like you said in your intro, I came to you when my company was very early on, and I was probably 6 months on my own, and I had a stack of invoices and stuff, and I don't know how to set up accounts. I didn't know how to do anything. So I came and talked with you because I got a referral from our mutual friend Dustin, who runs a property management company. And I sat down and you went over, this is why you want books and someone to do it and all of that stuff. So why do I want to hire a bookkeeper from the inception of my company?
You are not starting a business to do your own bookkeeping. You're starting a business to make money and to grow and be able to become self-sufficient financially. If you are so busy worrying about what type of expense is this, where do I have to put it, I've got to get my taxes done, man, I've got to get this done every single month, I don't know where I spent my money, you don't want to worry about that. You want to worry about growing your business. You want to be out there selling, meeting people, doing the right kind of marketing to help you grow, and making sure that the work is being done correctly. You don't want to be sitting there doing something that is not something that you would normally do. If you don't understand bookkeeping and how to record all of your expenses and your cost of goods sold, and you don't understand the differences between them, then you need to have somebody else do that for you. A lot of small business owners start out thinking, I can do everything myself. I don't have to have anybody right now. And I can tell you from experience and a number of clients that I have, that is not the case. Some people can, yes, I'm not saying they can't. But for the most part, if you are very good at what you're doing, you're going to grow and you're not going to be able to keep up with your books. And you're going to be in a position where you're going to be looking for somebody to help you and you're already a year and a half behind, which is not where you want to be. You want to be on top of everything every single month. And that is something that we help you do.
So you make a really good point that if you don't know what you're doing, you shouldn't be doing it, and you need to, we want people to hire us as the professional guys and gals, right? We want to go in, we want to be the flooring professional, and we want them to hire us. If we're not the financial professional, if we're not the bookkeeper, and we're not the bookkeeping professional, why are we doing it? That little expense is going to pay huge dividends for you down the road. So for me, I came in, I had Janice set up my books because I wouldn't even have known what to do. I didn't know there was like cost of goods, and I needed to track that and take that out of my total overhead because it's money that's paid to me, but I pay it back out, and then I only have to consider the profit of what I made off the good. Like, this is all education I've gotten from her. So I understand it now, but at the time I didn't. So by hiring her, I've been educated, but I've also freed up my time. And at first, my books, I'm doing a couple jobs a month. I'm selling floors here and there. It may have taken me a couple hours a month. Now I'm turning in stacks, like my stack of receipts and invoices and everything to turn into Janice probably tripled from 2018 to 2019, like the thickness of the folder. And I had trouble. All I do is I scan everything and I send it off to her. Like, I try and do it weekly. Sometimes it's every 2 weeks. Sometimes I get really busy and behind and it's at the end of the month. But I find trouble to even find the 10 or 15 minutes sometimes on a weekend to scan all of that stuff. If you're that busy and your business is growing, where are you going to find the time the hours to enter all the numbers yourself? So a little bit of investment can go a long way into freeing up your time and letting you work on your business instead of in your business. So we've come in, we've consulted, you've kind of explained what we're looking at. What is, now obviously all bookkeepers are going to be different across the country, but like, what's kind of like a standard rate that we would be looking at to have somebody look at our books every month?
Some bookkeepers will charge you by the transaction, and they look at your bank account and they say, you've had 50 transactions, I'm going to charge you $2.50 per transaction. That's what some bookkeepers will do. I prefer to flat rate it, which means that I'm going to charge you hourly for the first few months, $50 to $125 an hour, depending on which one of us is working on your books. And I generally will have the $50 an hour do the majority of the work so that it doesn't cost you as much money. Then what I do is I determine how many hours it takes every month to get things done, and I set an hourly rate for you. It might be $50. It might be $50 a month. It could be $100. It could be, depending on how large your business is it could be $3,000. It could be $4,000 a month. But again, that is all determined by how long it takes us to do your stuff. Now, the other thing that you want to consider is that Kyle was talking about giving us all of your expenses, your cost of goods sold, getting us all of that information in a timely manner. If I have to chase you down to get all of your receipts, if I have to call and email, and it takes me 6 months to get 6 months worth of receipts, it's going to cost you a lot more money. So you don't want to have to do that. You want to just keep on top of it. I've got my largest clients, I get their bills either every day or at minimum every single week. I get all of their receipts. I get copies of their bank deposits. If I don't get copies of their bank deposits, they do give me access to view in print only on their bank accounts, which we are happy to do. That allows us to go in, review the deposits so we know where your payments came from, and we can post them against your receivables correctly. It allows us to see who you may have written a check to that you forgot to put in or you forgot to send to us on all of your receipts. So we can go ahead and enter all of that, and we can pay your bills correctly as well. So by providing that information to us in a timely fashion, you actually do save yourself money. So the fact that Kyle is so good at getting everything to us in a timely fashion helps keep his bill lower than it could be for somebody that doesn't do that.
Well, and there's another reason that you want to get your stuff into a timely manner for you, because a lot of guys will want to take out a loan to get extra equipment or upgrade equipment. Well, you're going to need an up-to-date profit and loss statement in order to get that loan. If you haven't turned paperwork in for 2 months, 3 months, and then you want to get accurate numbers, you're not going to be able to do that. And the bank's not going to accept 3-month-old numbers. They're going to want to see current numbers. So now you've just dropped a ton of work on your bookkeeper saying, hey, I need this P&L. The bank wants to see an up-to-date one. Here's 3 months worth of receipts and invoices and goods that I've sold and all this stuff. I need it by Friday. One, they may not be able to get it done by Friday. And two, if they do, you're going to be paying through the roof. It's in your best interest to keep your books up to date as often as possible so that when you do need things like that, it's much easier for them to finish out the work, get you updated numbers. And as you all know, we're always talking about knowing your numbers. I wouldn't have been able to figure out my numbers on my own. I mean, I probably could have. I'm pretty good with math, but it was much easier for me to schedule a time to go into Janice's office, sit down with her and say, how much money did I pull out for me to live off of last year? How much did I spend on the business? What was this? What was that? And we worked it through, and we found out what the minimum operating expenses were for me and what I had to make minimum per day to support the lifestyle and the business going for me. And I couldn't have done that necessarily on my own. So if you truly want to be able to figure out numbers and know what it's going to cost you to operate per day, this is going to be an investment that will pay for itself. You think, oh, I don't want to spend that $100 or $200 a month. Like, I don't make that kind of money. Yes, you do. One, it's a business expense, is it not?
Yes, it is.
So, okay, now we're making income, but we're not going to have to pay taxes on that income because we're spending it back out. So not that bad of a deal. But we're going to get things from it. Our life will be organized. You can get statements at the end of the year and hand them off to your CPA. And that's all you have to do. You're not handing a box of receipts off and going to get charged an arm and a leg. You're giving them a clean sheet of paper that says, here's what I made. Do my taxes for me. There's probably tons more benefits that Janice can go over. So like, what am I saving? Like, what benefits? It's a couple $100 a month at the most for a lot of us guys that are, don't have a ton of crews going and stuff yet.
Well, the other thing you want to keep in mind is that when you start up a business, you're always going to have investments into the business yourself. Whether you're buying computers, maybe office furniture, equipment that you have to use out in the field. You'd like to buy a trailer, but you don't know if the cash flow is there for you to buy that trailer. Maybe you have something that you would like to know whether or not you can depreciate. Maybe you want to buy a vehicle and you want to depreciate that vehicle over 5 years. If you don't know what your financial statements actually look like, you're not going to be able to get that. The other thing, when you have somebody like me, I generally will keep in mind where your books are throughout the month as much as I can. And if you come to me before you have a large expense, I can say, no, you better not do that yet. Or, you wanted to pay cash. No, don't pay cash. You need to get a loan. Here's what you need to be able to do that, and help you make sure that everything is clean and ready for you to go. A lot of smaller businesses, when they start out, like I said, you've got that stuff that, maybe stuff that you already owned. Office equipment, furniture, whatever, that you're donating to your business. There is a value to that on your asset, on your balance sheet for your assets. So it will help you clarify those assets, and then they can be depreciated by your CPA at the end of the year, after which you will supply us with a depreciation schedule or a list of the depreciation values that were taken on your taxes. and we can adjust your books accordingly. But again, that all creates value for your company. And a lot of people don't realize that that's where it needs to go. That is going to create value for your company. That the fact that you are investing that money into your company and the products or equipment yourself, that goes a long way. So you want to make sure that it is properly represented on your financial statements. You're a bank that is looking at giving you a loan. They don't want just your profit and loss. They want to see your balance sheet. They want to know what you've put into the business. They want to know what you've taken out. They want to know what type of assets you have available to use. They want to know all of this. Your CPA has to have the same thing at the end of the year. So keeping everything straight is something that we help you do, that we make sure is there for you. So not only are you giving us your receipts for all of your cost of goods sold, which are the costs directly related to you doing business, the expenses to operate an office, such as your office supplies. Maybe you've got some smaller pieces of furniture that are not of a high dollar value, but you can expense them off that in that first year. That wouldn't go on your asset sheet. That wouldn't go on your list of assets. That would be an actual office expense. But by the time you're done with everything, you can take it to the bank, and the bank is going to say, "Oh, I see you've got this much value here left in this. It looks like you've depreciated it 20% instead of 100%. That's good for them, and it's good for your business. It's not always good to depreciate everything 100%. CPAs do like to depreciate everything 100% if they can, but the law does require that certain things are expensed off over a certain period of time. So make sure that when you do find a CPA, that you find somebody who actually understands those laws. Those are things that we try to make sure are covered on your books, and we will bring to your attention. Ultimately, what you do with your business is your decision, because it's your money to use the way that you want to use it. But if you were to call me and say, "Hey, Janice, I know I made $1 million last year, and at the end of the year I had $200,000 that I was going to have to pay taxes on, and I think I'm going to buy this equipment instead and just pay cash for it." Just because your net operating income is $200,000 doesn't mean you have $200,000 to go out and buy that. So make sure that you slow down a little bit. Take a look at your actual cash flow. You don't want to get a loan to avoid paying taxes on something. There are other ways that you can invest your money without going out and getting a loan. So please always keep that in mind. Those are the types of things that we bring to your attention throughout the year.
So you're saying that just because I have $200,000 in my operating account doesn't mean that $200,000 is mine. And we both know that there's a lot of contractors that get into trouble there, because if it's in the bank account, they think it's their money. Or there's contractors that end up having to get money from the deposit from the upcoming job becomes the money to pay payroll from the last job because they weren't set up correctly. So how is you doing our books going to help us with that situation?
This all actually goes full circle back to providing receipts, providing the invoice copies that you send to your customers, so that we can track where all of your costs are, what you have or have not. If you set up accounts payable so you can pay at net 30, and you don't think about that when you're looking at your checking account, you've got all those costs that have not come out of your bank account yet. And that's how we can help you. A lot of people don't plan for that. A lot of contractors will rob Peter to pay Paul, so to speak. And that's not what you want to do. In contracting, you want to pay for a job when you are paid for that job. The only thing that you're not going to be able to really do that with is payroll, because payroll has to be paid on time, and you might not get paid on a job for 30 to 45 days. But so you're going to have certain expenses that you will have to cover prior to being paid for that job. But what we can do is make sure that all of the payroll for that job is worked in to your job costing and the bids and the invoicing you're sending out in advance, to try to get those funds more quickly, depending on how large of a contractor you are. If you're a smaller contractor, then you're operating most likely day to day, maybe when you're smaller, month to month, maybe quarter to quarter. Again, this is something that you have to be willing to invest back into your company. A lot of people don't realize that that it's your business, but they think that they can take all the money out that they want. They can't. Your payroll taxes come first. Your payroll comes first. Your debts to your vendors and your suppliers, they all come first, and then you get paid. So you need to keep that in mind when you're running a business. It's one of the biggest things that people don't think about. It's where that first step of possible failure could play in, is to thinking that I've got the money, so I'm going to go spend it. It doesn't mean that you can go spend it. It's spoken for in other ways. So make sure that whoever you have doing your bookkeeping has everything caught up so that you know what you actually do have available to spend. That means all of your unpaid bills are there, all of your unpaid liabilities, like your payroll taxes, maybe if you have transaction privilege taxes that you have to pay, loan payments, your credit cards, things like that. You need to look at everything before you go out and buy yourself a new vehicle or maybe some new furniture. You need to really look at everything.
I'll give you a really good example of that, guys. I didn't want to pay for a bond in my state anymore. And there is a way that you can set up a CD or a certificate of deposit at the bank. So I got that paperwork, I set it up, I put my $47.50 into it, and I send the paperwork off to Janice. I say, hey, I got this investment account over here now, and I don't have to pay for my bond anymore. So there's this money sitting in this account that is my bond. So she adds it to the system. Well, about a month later, my truck decides that it wants to poop out on me, and it wasn't official, but it was going to get there. It had a coolant leak from the head gasket, so I wasn't going to deal with that on a 20-year-old truck. So I go and I start talking to her about, hey, I need to purchase a truck. Like, what kind of money can I spend? Blah, blah, blah. And she's like, see, I told you that was stupid to put that money in the account. So, and I just tied up $5,000. And that $5,000 is tied up. I have to quit contracting and have my license be invalid for 2 years before I get that money back. It's tied up for 2 years after I shut down my business, because in Arizona, you have to provide a 2-year workmanship warranty. So essentially the bond from the date of my last job, I can't touch that money for 2 years. So I now have $5,000 tied up in this investment account instead of paying $300 every 2 years. But I did the math, and if I run my company long enough, like I'm going to, I will make money on my money. But then all of a sudden I needed a truck, and I tied up $5,000. So that was kind of a stupid decision. And I had the money for the truck, but she was making a point of, had I consulted with her first, I would have had more money available and more cash flow. It wouldn't have been as tight of a squeeze for me to buy that truck when I bought it. That money was there, but boy, it really emptied my account. And then I had that accident on my way to Wisconsin over Christmas, and I had to buy a bunch of stuff then. And yes, I had cash flow, but then I was buying the new truck, and I spent a little bit more money on the new truck than I spent on the old truck, or the new truck that got wrecked. And so like cash flow got really tight for me in January, and there's a lot of money in some investments accounts that I could pull from and stuff, but I didn't want to pull it out of there. And so she's right. Like, if I didn't have up-to-date numbers and know where everything was at, I wouldn't have known how much money I had to actually play with between all of my accounts. Did I have bills that were going to come out? Did I have anything that was on a net 30 payment? So by having her in my back pocket and making that investment into my company with Janice, I was able to make informed decisions in a hurry about what I needed to do and could do for my business, for my personal life, and carry on. I didn't have to worry that I wasn't going to be okay, and am I going to have to try and get a deposit on a job sooner than I wanted to and use that money to pay for something I shouldn't have. Janice, I know we were talking earlier, and so you said, just like with contracting, and I have to be licensed in this state, there are states where you need a licensed bookkeeper. do you know offhand some of these states or all of them, and where guys need to be aware of they need to make sure they're hiring somebody that's a professional and doing it correctly?
There are some states out there where you have to have certifications to do certain parts of your bookkeeping, like payroll. California, you have to have a certification for payroll. Michigan requires certain things for payroll as well. Bookkeeping, places like, I believe, Texas requires special certification in Texas to be able to do your bookkeeping there. But as a general rule, you can go from state to state without any hesitation and be able to have one person do your bookkeeping no matter where you are. You just need to make sure that as you open those multiple office locations, that the person who is actually doing your books can do your books and they understand what they're doing. They can track it from location to location. Do your homework before you hire somebody, not only with the state requirements, but with the company that you decide to hire. Again, it's something where not only are they interviewing you, but you are interviewing them. And they will ask you specific questions, just like I'm pointing out about how can we get this back and forth? Is this something that a customer is willing to do to make sure that their books are maintained properly? Communicate with, make sure it's somebody that you are willing to communicate with your changes in bookkeeping that you need. For example, I have a client who actually has, he's doing business in three different states. He does union payroll. There are a lot of extra reporting requirements that have to be followed for any type of a union-based business. And as a result, if you hire just anybody, it may not be done correctly. So make sure that whoever it is that you're hiring to do your bookkeeping, they understand the differences in payroll, the different types of reporting that have to be done, the way to maintain the books for different companies. For example, you should not have more than one employee identification number or tax ID number in a set of books. Each set of books, each company that you own that has an EIN should have its own set of books. It doesn't matter if you're in real estate, if you're in contracting, maybe you have multiple restaurants. They need to be in a separate set of books. If you have a separate EIN, everything needs to be tracked separately. It's the best way to protect yourself. It's the best way to protect each of the different entities, and you certainly don't want anybody coming after your money or your personal property because it wasn't set up correctly. And that would be the state or federal Internal Revenue Service. So please make sure that everything is set up correctly and tracked correctly, and reach out to the different governing entities in your state to make sure that they don't have any specific requirements, that they don't have any specific certifications that people need. So make sure you do that before you hire somebody to do work in your state if they are not located in your state.
Okay, good advice. So let's say I don't want to hire somebody, which I personally think would be foolish, but that's me. It's something I just never wanted to invest my time in, guys and gals. Like I knew from the beginning that I wanted to be able to focus on other things, and if it cost me a little bit of money, that I was okay with that. And I know a lot of you do your books, or you have your spouse do your books for you. So if we're going to consider doing our own books, bare minimum, how are we setting them up? And like, what are the basic things that we need to make sure we're keeping track of?
Bare minimum, do not use a spreadsheet. Bare minimum, get a set of accounting software, get some accounting software that you understand and that you can use. QuickBooks is actually a great product that somebody can use. The desktop version is much, much easier. It's much more simplified than the online version. A lot of small contractors will use the online because of the ability to send emails and receive funds through the online version, which I understand. But if you're small enough and you can do the desktop version, I would recommend setting up the desktop version. They actually guide you through the setup of a company. The other thing that you should do, bare minimum, is meet with a bookkeeper. Not necessarily an accountant / CPA, but a bookkeeper who understands how your books should be set up, and let them guide you through the setup process. Even if you don't pay them for anything else, pay them to help you set up your books. It might cost you $150. It might cost you $250 depending on who you call. It might cost you $50. But you need to make sure that you are receiving the correct type of guidance to setting it up, and you've established that relationship. Down the road, as you get busier and you decide, I don't want to maintain this anymore, I don't want to deal with this, maybe your spouse gets a job someplace and they just, because they weren't working before and they've decided to go back to work for financial reasons, or whatever the reason is, and you decide that you don't want to have them maintain your books anymore, you've already got a relationship established with somebody. I would highly recommend having somebody review your books, probably at least quarterly for the first year you're open, to make sure you're posting it correctly and they can guide you through any changes that need to be made. Again, it's a small investment, but it will save you a lot of time and a lot of headaches if it's wrong. Not to mention all the money.
And we the more money we can put in our pocket, the better, right? That's what this is about, man. We're running businesses to be profitable, not to. Well, look, I want to run a business, and a business should run itself. So I don't want to own a job. So the more money I get to put in my pocket and put back in the business to build it into a business is going to be good. There's books like Profit First, and I haven't read Profit First yet, but I know a little bit about it. And the guy talks about having like 6 bank accounts, and let's have our operating account and our payroll account and our taxes account and our personal account. Now, I don't even know what all 6 of them are. Do I need that? Do you do that? Do you recommend that?
Depending on my customer, no, I will not recommend it, or I may recommend it. If you're the type of person who cannot leave money in your account and you think that you can spend it whenever, you're the type of person that needs all the different accounts. You're going to want one for your sales tax. You're going to want one for your payroll. You're going to want one for your rent, that if you have a brick and mortar. You're going to want one for the operating account. You may set up a savings account to put money into. You should never have a personal account associated with your bank account for your business. Your personal account is your personal account, and you should transfer funds from the business account to the personal account. If you're an S Corp, you have to pay yourself payroll. That is not an option for you. So that would go through a payroll, and you would actually give yourself a check and deposit it into your account. But you do not want to have a personal account connected to your business account. So I would never make that recommendation for anybody. I don't care who you are. You should not have that. You can have a business savings. You can have a business checking, which is your operating account. You can have your business payroll account, your business rent account, your business sales tax account. Maybe you want to put money back into another account to prepare for your annual income tax. You can have that, but do not ever set up a personal account directly with your business. Do not ever connect that to your business.
Okay. And so some people need these accounts, you're saying. Some people don't. If I do set up the accounts, I have to be on top of it, correct?
That is correct. Then a lot of people that do set up those accounts, they start transferring money from this account to this account and this account to this account, and they end up with overdrawn accounts all over the place because they're just not, that's not the way they're meant to be used. Those accounts are meant to be used so that you have funds available the next month to pay your bills. That's what those accounts are for, and that's what you should be transferring in there, and that's what you should leave there. Your payroll, you should be transferring into that account enough to cover all of your payroll taxes and your payroll to your employees, including yourself if you're an S Corp. If you have a rent account, you should be transferring funds in there so that your rent money is there the first of the next month. Not so that you have to go to your payroll account on January 1st and transfer money from your payroll account to your rent account because earlier in the month you took money from your rent account and you put it to your sales tax account. That's not what it's for. It's so that you're prepared for the next month to be able to pay your bills. That's why you're using those accounts. So if you cannot use those accounts in that manner, you should not have them because you'll end up with a lot of insufficient funds fees, which most banks charge $35 each way. So make sure that if you're doing that, you're the type of person who can actually keep track of them. And if you're not that type of person, you hire a type of person like me to make sure it happens for you. So, and again, in that situation, I would want to have access to your bank accounts to be able to look at the activity going in and out, and make sure that everything is the way it is. I do not want access to transfer funds. I don't want to have control over your funds in any way, shape, and form. I want to be able to look at it and say, hey, what was this transfer for? Why did you do this? Now you're going to be short next month. Where are we going to get that money from? So just keep in mind that if you're not the type of person that can stop themselves from accessing those funds before they're actually being used for what they are there for, do not set up all the different bank accounts. If you are somebody who can't control spending, then you need those bank accounts. But remember that those accounts, they are set up for a very specific purpose, and that's the purpose that they should be there to serve and nothing else.
Well, so you've brought this up now twice, that you would like access to our accounts, but you only want to be able to see the balance statements and things like that. And I know that most banks will have a way to set up an additional user that can only do those things. But you're my bookkeeper. Why wouldn't I want you to be able to get into my books and pay my bills for me and stuff like that?
It's called embezzlement and fraud. Do not ever give your bookkeeper, unless it's somebody who is an employee of yours that you trust, and you give them that access. That's up to you as an employee. But an outside bookkeeper or accountant should never have the ability to transfer funds or make online payments for you. I do not like that. I would never request it from any of my customers or clients, no matter what the situation is. I don't want that access. Absolutely not. I would like my own separate user, so that I can view and I can print your statements and I can view your transactions, and so that I can see what the checks were written for or where the deposits came from, so everything can be properly posted. That's all I want. And that's all any bookkeeper or accountant should want. Nothing else.
Okay, so we're gonna limit access, and it's not necessarily a trust thing. It's just a professionalism thing. So, but I know you can cut checks for me. So, I mean, there's a handy service, right?
Yes, I can print checks out for my clients, but they have to sign them. If they give me a signature that I keep on file for them, when they're out of town or something, and they send me an email telling me I need this bill paid, please print it and mail it out for me right away. That's one thing. Otherwise, I will send copies of any bills that we pay on your behalf to you for your approval prior to printing any checks. Once the payments have been approved, we will go ahead and print the checks, and you can come in and sign them. If I have an electronic signature on file, with your permission, I will use that electronic signature to pay those bills. Otherwise, I will not. The access to that in my office is me and only me. Nobody else has access to that program.
Well, and the key there is that you've stated multiple times, permission. And so I know that you won't do anything until I send you an email. You'll tell me you need to pay something, or would I like that paid, but you're not going to do anything until I send you that email confirming it. So if your bookkeeper's cutting checks without permission, you've got an issue. Let's make sure that there's some accountability there, and that there's at least a paper trail saying that this needs to be done. And that way everyone can be held accountable. It can go to court if it needs to go to court for some reason. And checks, Janice won't even cut a check to herself for me until I tell her, make that payment to yourself. She'll send me an invoice, and I always just reply, yeah, go ahead, cut yourself the check, because I know the money's there. But she won't even cut a check to herself, knowing that she can do it. So that accountability is there, and there's a paper trail if something goes wrong. So I think that's definitely the key in what you're talking about. Not only do you not have access to the bank accounts to move funds and things like that, and that's not necessarily your place, that should be the business owner's decision. But then if you are asked to pay something, you have a request making sure that you pay that, and we can hold you accountable to make sure it was paid on time and things like that.
That is correct. And always keep in mind that if you are a client of mine, I will not ever pay a bill for you without a request from you in writing and permission to do so. I'm not going to. You can call me, you can say, oh, just go ahead and do it, and I won't do it. I need it in writing. If I don't have it in writing, it doesn't happen. It doesn't matter how long I've done books for you. It doesn't matter who you are. It's not going to happen if I don't have approval from you and permission to do it in writing.
So we got in, and well, I didn't get in the tiff with you. I got in the tiff with your partner in crime in your office there, Susan. It was the end of the year, and they were, what form did you need?
1099.
Well, it was a 1099.
1096.
Okay, so a 1096 informs the government of all the 1099s I put out. And I was saying that I didn't have any 1099s because I use you, and I use our good friend Jesse with Floored-Dozers to do some demo for me, and I know he's running a legit company. And so I paid out all this money to all these other companies, and I'm saying I don't need to have a 1096. I don't have any 1099s. All that money is being reported. And I sat there and I fought with Susan on the phone for like 20 minutes, and she's trying to explain it to me, and I was just being really difficult and a jerk. Excuse me. And so why do I have to fill out that 1096, and why do I have to 1099 people, even when I know they're reporting the money?
A 1099 is what allows the government to make sure people are reporting their income correctly. As a business owner, if you do not issue a 1099 to somebody that you've paid $600 to or more during the year, you cannot write that off on your taxes. You can consider that an owner draw. So if you pay somebody $13,000 and you're not willing to give them a 1099, you have to write that off as an owner draw. You cannot write that off legitimately as a business expense. If you do write it off as a business expense and you get audited, you just found yourself owing penalties, interest, and everything else to the IRS because you reported it as a 1099 cost of goods sold, but you didn't issue the 1099 for that money that you paid out. If you're not willing to issue a 1099 and then sign a 1096 so that they can be mailed out by January 31st to the federal government, don't use 1099 contractors, do everything yourself, or hire people so everything is done in-house and all of your costs are tracked through payroll. You have to issue 1099s, period. One of the things that I like to tell my clients is I'm not going to go to jail for you. So if you don't want to do it right, you don't need me. You need somebody else. I'm not going to let something happen to you because you're unaware of something or you just don't understand it or you don't like it. I'm not going to let something happen to you, and I'm not going to let something happen to my business either. So remember, I'm there to protect you. I'm not there to hurt you, even though you don't like it. I'm there to make sure you get the biggest bang for your buck, so to speak, by being able to write those expenses and costs off legitimately. So if you've got somebody that's been doing work for you and you've paid them $600 or more in a 12-month period, they need to get a 1099. Or, as I already said, it's an owner draw and you're paying taxes on it.
So in my opinion, look, there's my money well spent for the year because I don't have to worry about any of this stuff anymore. I don't know this stuff. Look, I didn't even sign up to do TPT, transaction privilege tax stuff, and have my own thing because as I was getting my license, it was all like, you have to file by the 20th of every month and this, that, and the other thing. And I was like, I don't want to have to deal with any of that. I don't know what's going on. I'm not going to keep track of it. So I just pay tax at destination when I pick up supplies and all of that stuff. And I mark up my material from there and resell it and let Janice deal with all of it because I don't care. I don't want to deal with it. I don't want to deal with 1099s. I didn't even know a 1096 existed. There's W-2s, W-4s, W-9s, and probably, I don't know, you're doing monthly payroll stuff for me, and then you're pulling the taxes out of my accounts, and I'm always complaining because it feels like ever since I hired Brad, there's money coming out of my account every week now. for me, the benefit was there from day one just to have my books done. But as my company continues to grow, there's all these things that I didn't know. And I've been able to invest my time in how to better market my business, how to better financially set myself up for success in the future instead of having to read books on payroll and, managing books and things like that. So for me, from day one, it's always been a good investment, but it continues to pay for itself as the company grows and I add more things to it. So what other things are you managing for us besides what we've gone over so far?
Well, you just went over payroll.
Okay.
So we do have the ability in our office to go ahead and do payroll, and so that we make sure that all of your net payroll, of course, goes out to all of your employees on time. If you pay via direct deposit, that gets processed in a timely manner. All of your payroll taxes are paid on time based on the federal liability that you have on a monthly basis or an annual basis. There are all the reports that have to be for the returns, I guess, that have to be filed as well. We try to track everything through for you. At the end of the year, we send out your W-2s. We file them online with the SSA. We send out your 1099s for you. We get them with the 1096 in the mail to the federal government. We take care of a lot of different things that companies all know have to be done, but we are one location to get everything done. So if you call us to take over your books or start doing your books and then you decide you're busy enough and you're going to hire employees, we will guide you through that transition as well and make sure that all of your payroll taxes are paid on time.
Well, and now, so not all bookkeepers will do payroll. Not all payroll companies do bookkeeping. And some CPA firms do payroll and bookkeeping.
Correct.
So when I'm looking into a company to hire them, do I want it all-in-one? Do I want somebody that specializes in each? Is there a benefit to it? Is there detriments? Like what do we need to really be looking for when we're looking into these different aspects?
That is actually a matter for professional preference for the customers. Some customers like everything in one location. Other people who use GAAP as the generally accepted accounting principles feel that they need to go outside of their business to have payroll done by a different company or keep it in-house and hire somebody to be a payroll administrator on their staff that does just payroll. It's a matter of preference. I have somebody in my office that does payroll separate from the books. They're not going to do your bookkeeping and your payroll as a general rule. They will do follow-up on some of the bookkeeping to make sure that all the payroll entries are there and entered correctly. If you outsource your payroll to another company, then the other thing that you're going to want to make sure is done is that the journal entries are entered correctly on your books for your payroll, including all of your payroll tax liabilities, and then that those liabilities are being reflected as paid once they're actually paid. A lot of companies, like the larger payroll companies such as ADP and Paychex, they pull everything out of your account all at the same time. In an effort to give our companies more control over their finances, those funds are withdrawn directly out of your checking account when they are payable, when they're actually paid out versus in advance. So I'm sitting on some things like federal unemployment taxes. You don't pay those until you have a $500 balance. That's when you're required to pay them. If you're a smaller company and you make all of your Arizona unemployment taxes on time, that could only be $42 per person. So you would have to have at least 10 employees for it to hit $420 at the end of the year. Again, that means that all of your Arizona unemployment taxes have to be paid on time, because if they're not, then you lose that credit advantage that the federal unemployment taxes are allowed to be given if you pay all the state on time. So if you pay one state unemployment payment late, even 2 days, you just lost the credit that the federal government gives you for your unemployment taxes, and you just got nailed with interest and penalties on top of it. So, but what we do is, as I said, we let our clients have that cash flow when you're smaller, sometimes a cash flow for an extra week or 2 weeks or month is more important to you, you can set up your payroll tax account at that point if you're somebody who can't control spending, and you move your taxes into there for your payroll taxes, and then it'll come out. We do have a payroll trust account that we can pull those taxes out in advance if you want us to. It's not something that I prefer to do, but if that's what my customers need, that is what we will do.
Okay, so you're handling payroll, you're making sure our money's where it needs to be, you're making sure things are paid on time, because let's be honest, I'm more worried about getting a floor in than I am about getting home and making unemployment payment. That's not on my mind. So I don't know. The value just keeps continuing to build up for me. Like, I don't want to deal with it. I don't know why anybody would want to deal with this stuff. You like numbers. I want you to deal with it. I like putting in flooring. I'm going to go do that. What if, this could be a slippery slope, and I don't want you to get in trouble, and I know you won't put yourself in trouble because I know you. So we've kind of gone through how to set it up, what we're going to do, where do I want to go and interview and consider, do I want bookkeeping or do I want payroll with my bookkeeper? Do I want to find a CPA firm that offers all three things? But we're past the end of the year now, but let's pretend we're getting towards the end of the year. I've set up my business. I've had a bookkeeper on board for me for my first full year. I need to get everything dealt with. What do I want to look for in a CPA that's going to not only make sure it gets done correctly, but that's going to back you up well?
Bookkeepers will develop relationships with good CPAs, and good CPAs will develop relationships with good bookkeepers. What you want to remember is that bookkeeper and CPA have to be able to communicate with each other. They have to be able to say, okay, I see, like a CPA, sometimes they'll say, hey, you've got all of these donations that you've got sitting here, and I think that this belongs here too. And I can come back with them and back at them and say, no, it has to be a 501c3. That makes it not a legal donation. That is tax deductible. It ends up being an owner draw. And there is a website that the IRS has set up where all of these 501c3s and other 501 tax deductible donations, all the companies are actually set up. So you can see, like with schools, sometimes you can do a 50% deduction. Depending on what type of program it is, you might be able to do 100%. If it's a church, it's the same type of thing. But they have to have that status. And accountants and bookkeepers that communicate well together will see that, and they will complement each other rather than, getting upset because something was found that they didn't catch, or vice versa. And that's what you want. You want people that can communicate with each other, can work together really well. We talked earlier a little bit about depreciation schedules. Your CPA is the one who does your depreciation. If you do not provide your bookkeeper with a depreciation schedule, then your books will be wrong next year, and the next year, and the next year, and the next year, because your assets are not going to be properly recorded. So you want to make sure that you can get those depreciation numbers to your bookkeeper, or that the journal entries can be recorded in your office by your in-house bookkeeper. That's something that is frequently missed, so that's a big thing, and it needs to be done. So I would say definitely you want people that communicate well together, who can bounce things off of each other, who have that ongoing relationship. It really makes a huge difference on how quickly your taxes can be filed. Your bookkeeper also can say, you know what, we're missing this, that, and the other thing yet because you were not a good customer and not a good client, and you did not get things over to us when we needed them. And the first thing we're going to tell you is file an extension. And if you say to us, I need you to let my CPA know you worked with them last year too, we're keeping the same person, I'll send an email to you requesting your permission to notify the CPA and who it would be to file an extension. And if you respond, yes, please do so, I will forward that same email to your CPA and copy you on it so you know I've done that. But that's one of the biggest things. When your CPA and your bookkeepers, when they communicate really well together, they know where you are and they can guide you through it. If you happen to be somebody who is behind a couple of years, the most important year for you to do is the most recent year, because you already owe penalties and interest on the prior years, possibly if you owed taxes. But you do not want to have to pay penalties and interest on the current year that you're filing for, if there's any way around it. So that's always the most important year for you to get filed. Always keep that in mind. If something happens and you have to amend it, you have to amend it. But you need to get it filed.
Beautiful. So I think that's all. Everything has been absolutely great. We know why we would want to hire a bookkeeper. We know how to set stuff up on our own if we want. We know what to look for in a bookkeeper. We've really hit, we got Bookkeeping 101, which is what I wanted. And so thank you very much. What I want to allow you to do, because I let everybody do this, is I want you to plug you. So where can people find you? What's your company? How do they reach out? Can you service, if I'm over in North Carolina, can you do my books?
Okay, so my name is Janice Nordmark. I'm with Bulletproof Bookkeeping. We're located at 4135 South Power Road, Suite 123, Mesa 85212. Our office number is 480-313-6093. In North Carolina, before I would agree to do books for somebody in North Carolina, I would go online and look and see if there's any certification, because that's one state I'm uncertain of.
Okay, but you can help. If anybody that listens to the Floored-U-Cation podcast would like to look into your services, you can service people from out of state. We did talk about that, and you would be willing to take them on as a client if they are willing to do the work on their end.
Correct.
Okay. Well, Janice, thank you so much for joining us, educating us, and giving us a little insight. Guys and gals, I know this wasn't exactly the dorkiness we usually get into talking about flooring, but this is an aspect of business that we all need to understand so that we can have a business instead of owning a job. So, Janice, thank you again for joining us and the education.
Thank you, Kyle, for the opportunity.
You're welcome. That's all the time we have for this week. To keep the conversation going, head on over to the Floored-U-Cation Facebook group. Be sure to subscribe so you can hear each and every episode. We can be found on Apple Podcasts, Stitcher, Spotify, iHeartRadio, and most major podcast directories. Don't forget to leave a review and let us know what you think about the show. If you'd like to be a guest, have questions or feedback, you can email us at flooreducation@gmail.com. You can help support the show by becoming a patron over at patreon.com/flooreducation. If you need a discount on your tools, check out toolsforflooring.com and use discount code FLOORED for 5% off. Remember, your education never stops.